Gold dipped, tensions rise in Lebanon and Asia. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, welcome back Sam, who's been looking continually, he's done this for the last few times he's been on, at the unfolding crises we have around the world. How are you going today, Sam?
Good, Chris. Good to see you again.
Good to see you. Now, some continuation of that disturbing news that you've pointed out today with some interesting implications. But let's start off with really the background. What are the potential reasons here for the gold price dip that we've seen?
Well, the S&P Global Services PMI actually had a surprise rise. So it's at a 26-month high. So that's, well, look, it's a short-term reading, I guess, because a lot of news has been coming out. I mean, the previous week we had bad news as well come out and make gold go up, but this reading was strong for the economy. So it's essentially it's a survey of companies that provide services and manufacturing in more than 40 countries, and they make up the majority of global GDP. And it was just a survey. So it had a reasonably positive result, and that's what made gold dip. Another reason is potentially as well, the weekend gold trading is closed. Obviously, people can't speculate on the gold market when trading isn't available. So people are, if they're buyers, they tend to sell before the weekend close, so they're not exposed to risks that happen over the weekend.
And this is interesting because at the moment, and we'll get to this a little bit later, talking about those tensions and the things in the background, it's interesting that people are sort of selling into a weekend because in some ways you would expect people would want a little bit of insurance into the weekend with the potential for anything to happen, as has been the case recently. But what are some of the other metrics that you're using to monitor gold specifically before we talk about that?
Another metric is you can just look at the DXY like we have in the past. And if you look at the DXY on a weekly chart, you can see some really clear resistance levels. Now, the news is one thing, but the DXY has made it pretty clear that there's a really strong resistance level at about 106.1. And we're very, very close to that currently. So it could run into some trouble if it hits that level. And what that would mean for gold is gold going back up, essentially, because the US dollar kind of maxing out in its strength. If it does break that level, which is a possibility, then it has a extremely strong resistance level at 106.58. That goes back for a long time. So it does have two resistance levels right overhead. And that is a sign that gold may have potentially bottomed.
And it's such an interesting thing to look at the US dollar at the moment because there are definitely strong competing narratives on both sides of the equation. You've got that strength sort of coming from everyone needing US dollars in the global situation, like the way that the US dollar works as a global reserve currency. But you've also got really quite significant concerns around debt and all the other things that we've discussed multiple times on here that should be weighing on that US dollar. So you've identified those levels of resistance there. Are you generally seeing a weaker dollar ahead? Is that how you see it?
Well, it depends on the time frame, I guess. If you look at the chart of the last 100 years, it's not looking so good. But if you're looking in the last week or so, it looks strong. But look, it would be difficult to see the dollar going very much higher with all the news of imminent rate cuts. I know this positive news has caused people to talk about a potential delay in rate cuts, but this is just one news reading, and I'd be surprised if this just takes precedent over all the other readings, which are, a lot of other news readings will be even stronger than this one. And then you have to look at the debt situation as well. We're always talking about the US has essentially an unpayable debt situation, and the only way out of that is to essentially cut interest rates and print more money and kick the can down the road. So it does look like the dollar will eventually get weaker, much weaker, especially after they start cutting, which what most analysts think is this year.
Yeah, right. So time frame is really important, but I suppose the elephant in the room, or the thing that can turn all of this on its head and make a lot of that other analysis irrelevant, is the global war tensions. You've been talking about this for quite some time. Can you sort of update us firstly on where we're sitting currently?
So since October 7th, there's been a lot more action than what's been focused on in the news. For example, if you look at the border with Lebanon, there have been, since October 7th, about 400 deaths from gunfire back and forth between mostly Hezbollah soldiers and IDF. So that situation is potentially heating up because the chief of Hezbollah said that he's ready for the conflict to expand, and if it does, it'll be a war with no limits, no ceilings, anything goes. So that's what the Hezbollah chief has said. Now you look at Hamas. Hamas isn't really particularly well equipped. There's talk of, Iran giving them weaponry, or, these other forces funding them. But Hezbollah is a completely different force. Hezbollah has precision missiles, and Hezbollah could be very difficult for Israel to deal with. Now, if Israel wanted to take on Hezbollah and have a proper war with Lebanon, they might actually have to have a buffer zone that goes inside of their country. So they might need to actually push into their territory just to create enough of a defensive area to, protect Israel. And that would be hugely problematic, because that would be, another border that's being crossed. Although firing missiles and guns across the border isn't exactly much, much different. And so that's the Middle East situation getting worse. And then you also have the South China Sea, which recently we've had Chinese and Philippine ships having scuffles. They haven't gotten too violent. It's likely been things like water cannons, but recently the Chinese and Philippines have been fighting with axes, hammers, and other weapons. And this is close to it's about 200 kilometers off the coast of the Philippines, right, and about 1,000 kilometers off of China.
So there's a lot happening there. And if we sort of bring this back to gold, and you have been every time, but if we bring this back to gold and the potential, is it that ultimately central banks or other governments start turning to gold in that escalation situation? Is that generally how it happens, or is it just that retail comes in and wants to get their hands on something stable because the uncertainty, particularly in those areas, destabilizes their environment? What's the actual driver that translates a geopolitical event like the ones you've been describing into gold prices moving much higher, as they historically do?
Yeah, so central banks are already there. They're probably trying to keep the gold price low. They don't want it to go up because they want to buy as much as they can, it looks like. But other entities, other big entities that have to manage their clients' money as well as individuals. I mean, you even look at Goldman Sachs saying gold is their favorite hedge for the US elections. So that's just an election between two parties. That's not, an international war going on. That's just two candidates in one country. So they're looking at gold as a hedge. So they're obviously recommending this to their clients to invest in gold so that they don't lose money during a risk event. You look at something like a war breaking out, if things heat up between Philippines and China, or more realistically, if Hezbollah and Israel start going at it, that creates an environment where individual investors will be scared, and then big institutions will have some big decisions to make, because they have investments in places like Europe. They have investments around the world that could be affected by this. So they want to make sure all their ducks are in a row, and make sure their money is safe, and their client money is safe, and their reputation safe as well.
Well, it certainly seems like it's that analogy that's used. You don't want to be in the burning, what someone calls fire in the theater, and there's that exit, and everyone rushes to the exit. It's that sort of situation I can see unfolding here. So, it probably pays to be paying attention and hopefully on the early side of that, not waiting too late, because by the sounds of that, you'll have a lot of people rushing at once to get in if one of these situations really does escalate quite rapidly.
Yeah, so it all doesn't seem real until it suddenly it is real. Kind of like Russia, Ukraine. Drama's been happening there since was it, the early 2000s. And then no one really paid attention until it was too late. So hopefully these regional conflicts die down, but so far it looks like they're heating up.
Well, a sobering assessment, but we always appreciate you keeping us up to date on what's going on. So thank you very much for that today, Sam.
Thanks, Chris.
Thanks everyone for watching. We'll chat again soon.